In this video, I'm going to run you down through my strategy that made me $30,000 this week trading, and it was only with a few trades. You're going to learn literally everything from finding the best stocks within the market, how to identify the market trend, and how to actually capitalize on these big moves within the market, because we're not looking to day trade these small little moves. I'm looking to swing these moves and hold them for a long period of time to capitalize on these gains and just continue to hold until the trend dies out. That's the whole point of the strategy, and I'm going to show you exactly where I take the breakout trades and exactly how I entered everything. So make sure to lock in on this video, and there's a ton to learn from this. Let's go. So let's dive right into the charts. The first thing you want to do is always get an understanding of where the market is, guys. This week, we were coming into the markets with a big gap up, but the week before, and this is where I added a lot of my positions, we were setting up in an inverse head and shoulders pattern. An inverse head and shoulders pattern is basically when you have a left shoulder, a head, and then a right shoulder kind of position. And this just sets up for a big base and a big move to the upside once you break these highs. So what I did was take a decent amount of positions into the end of this week, and then obviously we gapped up on Monday. Now, I didn't know that we were going to have a gap up, but the price action indicated to us that there should be some strong action. What you're looking for within the markets is always tightness. You want stocks to be tight. You want the market to be tight, because this is where the biggest moves are made. Even right here, when you had a big move down, you could see it all stemmed from this big bear flag, move down. Then we had the move up, sets up in a flag, boom, you get a leg up. Sets up in a flag, you get a leg up. So you want to be a little bit careful when the market starts getting extended to both sides and trading within that extension. We always want to trade when markets are tight. You could see right here, the markets have been a little bit extended, but right here, they were very, very tight after kind of making that first leg up. So this is why I had a lot of risk going into the week. But you always want to understand where the market is, and it was clearly breaking out and trending and very, very strong. And you could see volume supporting us as we're making new highs and continuing higher, which is why I was favoring calls and I was favoring really strong upside movement basically the whole week. So you can see here's my TradeZilla. Going into the end of last week, I picked up a few positions and then I sold some on Monday. Now, I had a decent amount of positions going into the week. I had the ticker Tesla, and I'm going to be going over that one. That was the biggest trade that I took on the week, and this has probably been my biggest trade of the year so far. I traded this one twice. So the first trade that I took on it was a breakout of this big base right here. So you could see, again, we want stocks to be very tight and we want stocks to be compressed before taking a trade on them. What I was looking at for Tesla is this was coming off of a major downturn, off a major downtrend, and then it started to bottom. This is what's called capitulation volume. You can see capitulation here on the left side of the chart. Then right in the middle, in the center of the chart, you could start seeing you have a ton of accumulation volume, meaning buyers are starting to accumulate while weekend sold all the way down. Now smart money is probably buying and getting into this position. And this is what I was looking at for Tesla. I could start to see some accumulation. I started seeing that there was a tight base. And when it started to break out of this trend line and get back to the moving averages, because again, that's the most important part. We need the stocks to be above our key moving averages. That's when I bought it. So it broke out of this spot right here, had a ton of volume on the breakout. This was my first buy on Tesla right here. And I was using low of day as a stop loss. You can see this one just kind of ended up running. Now, the first trade that I took on this one was a like 290 call for May 16, right? So at the time, this was trading at 262. I took the 290 call. The reason why I took the 290 call is because I was targeting the 290 level right here. And you can see that's actually where the stock kind of paused a little bit. And I trimmed most of my position here into the highs as it was breaking out. But after that, I don't just sell my whole position and just forget about the stock. And this is important. You want to trade leading stocks within the market. And you could see if I would have just sold everything here and just forgot about the stock, I wouldn't have been able to catch this big continuation move, which kind of like 5x'd my profits already that I had on the stock. So what I did was buy something called a rollover trade. A rollover trade is when you buy a little bit more time for your contracts to move. So for this example, I bought 1 month out contracts and I chose the 350 strike. The reason why I chose the 350 strike is because that's kind of the area that I was targeting into 350, into 360. And you could see it actually hit that target. So the second time I added Tesla was right here. It was setting up in a tight base in a bull flag, retested into the moving averages. The pullback was on very, very low volume. And this is the strategy. This is how you trade the strategy. You have a strong leg up. Then you have price going sideways, creating that flag or compression pattern. It goes into the moving averages. You get either a hammer, a bullish candle, whatever you're looking for, and volume is low the whole time as price is pulling in. This is exactly how you want your setups to look. And then you want high volume as the stock is breaking out, right? So that is the strategy. And then this is where you get the big trends and the big moves. And again, you literally had to hold this for only 4 days and you would have caught at least over 200, 300, 500% on almost any contract you would have chosen on the ticker Tesla. So you could see right now, obviously there's low volume. It's going to probably set up again, right? That's what stocks do. They don't just go straight up. They don't just go straight down. You could see even when it was coming down to the downside, it had to set up. It set up a base, then move down, set up a base, move down, set up a base, right? Until it started to bottom out. So you always want to look for these bases to form. This is how you catch some of the biggest moves within the market. And this is the exact setup you want to see. So I sold this one going into the highs here. Right there, could show you on TradeZella. This was one that I took some profits on Monday. Right here, you could see I made $13,000 on it. So as it was kind of pushing up, you could see I started to sell a little bit as it was moving up. And yeah, actually, no, that was right where I bought it. Sorry, and this is exactly where I sold it. So I was selling it as it was moving up. I still have a lot of the position open. I sold a little bit more here. If we go to the hourly time frame, it'll be easier to see here on TradeZella. But yeah, you could see I was just trimming it out as it was making new highs. I'm still in it now, so I didn't trim anymore. I'm probably going to wait for new highs or for it to set back up. And then you could see these are some of my executions. So it gets really exponential, right? Like obviously the first trim or two, you're only making about $800, but then after that, the contracts just juice up and you have about 2,000, 3,000 per contract that you're making in profit, which is pretty crazy how exponential options can get. So that was a trade there on Tesla. And then one of the best trades that I had on the week was after the market was gapping up on Monday, I caught the ticker Uber for a beautiful continuation trade. This one was one of the only stocks that wasn't opening up very big on the day. So you could see on Monday, it actually opened up pretty weak. And what I was looking at for this was on the weekly time frame, it was setting up an absolutely massive kind of flag here, right? So this is a weekly kind of pennant, flag, base, and I was looking for this to break out. And on Monday, again, it wasn't opening up really that strong. So it was one of the only setups that I was looking to trade because it wasn't opening already so strong. So it's kind of like a laggard, but it could have, catch up with the market, which is exactly what it did. So it had a ton of volume as it was going up. Again, that's what you want to see, right? Stocks don't just go straight up. So it's set up in a beautiful flag, very similar to the Tesla setup. And then it triggered over the previous day's high. So what I always like to do is use trigger levels for my trades to enter. What a trigger level is basically a level that's very important, like a key level, one that the stock is rejecting over multiple attempts. And the moment it breaks, that's your entry. It just makes entering stocks so much easier rather than just guessing where you have to get in. The moment it breaks, you get into the trade, then you set your stop at the low of day, and then you're able to catch a big continuation move. So on this one, you could see ends up running, making new highs. I trimmed some into this, and this is another one that I rolled over. I took more time on it because again, look at the weekly time frame, just absolutely huge weekly time frame on it. And I'll show you guys the entry on the smaller time frames, lower time frames right here. So the stock opens up. Obviously, the first 5 minutes, I don't like to trade because there's not really enough data to see what's going on. I wait for it to set up. It got back through the high of the day right here. This is where I entered it. It had a ton of volume coming into the highs here. Entered it right here. Stop goes to the low. And then you could see it ends up juicing on a ton of volume and running really, really nicely. And this one, I will be targeting the Fibonacci levels. The reason why I use this and Fib levels is because the stock's at all-time highs, right? So it's very hard to find there's no previous resistance levels at all. So you could use Fibonacci levels, and these are the ways that I set this up. So I will target 95, 106, and then 120 for my final targets for these calls, as long as the stock holds and it doesn't, take me out. So I always have my stops break even after the first trim, and then I let the stocks run, I let the position run. And you could see this one was a really, really nice one. And again, I'm still in a good amount of this trade, right? I still only took about 15 or 10 of the contracts off. So I'm still in a lot of this, but you could see right here was my entry into that spot. And then it kind of, pushed up and made new highs and was really juicing up. So this one was a really nice one. Yeah, right here over the highs. So I took that, I trimmed some there. I still haven't even, taken off all the cons yet. I still have a lot of time on these, so I'm just letting them play out. And they'll probably continue to run, as well as the Uber roll that I took as well. So that was the other trade that I took. And I just had a very, very good kind of momentum going from last week. Another trade that I took was on the ticker HIMS. This was another rollover trade. So a ton of my trades this week were just rollovers, and I was just rolling over profits from my previous trade. So this is the trade that I took on the ticker HIMS, and this is one that I was just been trimming out. And this is the importance of holding your winners, right? So I took my initial position here on the break of this trend line, and then I rolled over on this day right here where it had a big breakout into the highs. So you can see the 15-minute time frame. I rolled it over right here. I entered right here. You could see it ends up, absolutely running and just going crazy on the daily time frame. So on the hourly, be a little bit easier to see. But this was a huge breakout on the hourly time frame, daily time frame. I'll show you guys on trading view here. Just look at the weekly time frame, right? So this is what I was looking on HIMS, and it's still going. That's the thing. Like, you never want to sell out of your full position, because these stocks just continue and continue and continue to run. So you could see this one gets through these highs right here. This was my first initial entry on it right there. Then the rolls were taken on this day where it had a ton of volume after earnings. And then you could see I end up swinging it. Comes all the way up to 65. Again, when you have previous levels of resistance, that's what you always want to target. So right here is my first target. Then my second target was at the full gap fill, which was right here. And then that is where I took most of the position off, but I'm still in as long as it holds the 8-day. There's no reason to get out of the position. Super strong stock. The 8-day just keeps on getting bought up. And as long as that holds, that's all I need, right? Just for that to hold. And I'm just going to continue to stay in the position. So that was that ticker right there, HIMS. That was a big one for me as well. And then one of the last trades that I took that was an absolute runner for me this week, that I'm still in as well, was the ticker HOOD. This one has been running really, really well. The trade that I took on this one was a breakout trade of this bull flag right here. Very similar setup to Tesla, right? It had this big base. It was setting up in a tight flag right off the moving averages. Volume was declining as the stock was setting up, and then high volume as it was breaking out. This one gapped up on Friday here, on Thursday, and then into Monday, it kind of continued to push higher. So I took the trade right here as it broke this flag, right? So on the lower time frames, I could show you guys that. On the 15-minute time frame right here, as it was breaking out, that's where I took the trade. And you could see it closed above. It had some high volume as well as it was breaking out. And then it ends up gapping up, pushing all the way into the highs. And again, just like HIMS, I'm always trimming into previous levels of resistance. So this is my first target right here. Then you're looking to target this level right here. And then the last target would just be the all-time highs, right? You always want to have a system to trim out of your positions. You never just want to get out here all at the same time, because then you're going to miss that continuation move. Could you lose a little bit of the profits? Sure, right? This can come back and stop you out at break even. But most of the time, if it's a strong breakout, it's just going to continue to run. And you're using the momentum of the markets to capture really, really big moves within the market, and that continuation leg within the market, which is exactly what I try to do and what I try to look for. And the last trade that I entered into the end of the week, that was a nice winner for me, was QBTS. This one is a quantum stock. It was setting up on the weekly time frame, absolutely massive weekly base. So right off the bat, you could see the weekly base is just insane. This big level here at like $11 was absolutely huge. It was rejecting multiple times. This is the first time I was able to break above. I actually entered it on this day right here on Thursday. It had a little bit of a failed breakout, but never closed under the 8 EMA or got below it. So as long as it holds the 8 EMA, I like to stay in my positions. I took July cons for this to give it a little bit more time, but it looks absolutely amazing. If it could stay above this 12 level, it's probably going to run and make new all-time highs. These quantum stocks have been going absolutely crazy. So this is why it's always so important to identify the theme. And this is what I was saying kind of earlier in the beginning of the video. You always want to identify a theme and a narrative, because if a stock is very, very strong and it's in a strong theme, it's just going to continue to run. So quantum stocks have been very strong. There's been crypto stocks that have been very strong. These stocks have been moving up very well. Chip stocks are kind of coming back a little bit. So we always want to find that theme that's kind of leading the markets higher. And we want to be in like the strongest theme and the strongest stocks. And this is going to really help you be in, really good names that are going to lead the markets higher. So that was the trade on QBTS. I did trim a little bit into the previous day's high right here. And now what I'm looking to do is just hold it and probably look at the all-time high for the target, which is 13.07. You could see my entry on this on the smaller time frame was right here yesterday. So it's breaking out of this flag. Right as it got through the high was my entry, and then I was using this kind of low of the range as my stop loss, and it ends up running, making new highs. Absolutely beautiful trade. You could see right here was my trim on this, so my execution on it. But yeah, that looks pretty good. I actually trimmed a pretty good amount at the top, which is pretty nice. And then obviously pulled in a little bit, but it's still holding up really well. So this one should probably continue to run as long as the sector and the market stays strong. And then the last trade that I took, this was actually a loser that I had. So I took one losing trade this week, 6 winning trades. And this was a really unfortunate one on the ticker RKLB because it ended up being a big winner. And yeah, this is just unfortunate. And it still shows you, after years of being in the game, you could still make mistakes and you could still do things a little bit better. But I'll show you guys the trade that I took on this one. So it broke out of this massive base. You could see again, it was setting up in a beautiful flag, volume declining as price was consolidating. It had earnings here, but post earnings, just beautiful volume breakout on Wednesday. And this is when I entered. It got right above that level, 23.5. I entered right there on the smaller time frames. It broke out on the 5 and 15 minute time frame when it closed above. That's when I took my entry. And I probably should have put my stop loss to low of day. The reason why I didn't do that is because the stock was a little bit extended. It was already kind of close to its ADR, so its average daily range. And I was a little bit scared of a deeper pullback, so I just wanted to play a little bit safer and keep the stop tighter. So I used the 23 level because I thought that looked pretty important. Because if the stock was to pull in and break under this spot here, I kind of thought that it was not going to go higher. So I basically almost sold bottom on this. Very, very unfortunate. I sold it right here at the low. I entered it right here. So it was still a very small loss, about like 20%, which is, to me, following your rules is the most important thing. So I can, go and dread this loss, or I could say, okay, I followed my rules. I was smart about this, and I still ended up taking a loss, but I could always get back in, or I could always kind of, better myself next time. Maybe I should have got a better entry. Maybe I should have taken the entry a little bit earlier. That way I could have taken a little bit more risk. But yeah, I sold this one here at the low, unfortunately, and then it ends up just running and hitting off the 8 EMA. And this is why it's so important, guys. When you're picking a stop loss, always pick the most important level. I like to use the 8 EMA, so the 8 EMA on the daily time frame. If you can combine your stop loss with the 8 EMA on the daily time frame, it can make for such good swings, because the 8 EMA in a strong trend is usually the moving average that gets respected the most. So that's why I like to use the 8 EMA for my stop losses, specifically on swing trades. It just works so good. You could see like the strongest stocks in the market, for example, like HIMS, it'll hold the 8-day and then just continue to go up. Right here, you could see it held, right here it held, right here it held. So 3 tests already that it held, and it just continues to run and go higher off that spot. So the 8 EMA is so important. But yeah, hopefully this was able to help you guys kind of learn my strategy and kind of the way that I structure all my trades and enter, exit, all that stuff. Obviously, there's a lot of moving parts to this, but it's really an easy and simple strategy to learn once you get everything down. You're looking for big and tight bases within the market. You're looking for the markets to be in a strong trend. So you want them to either be in a strong uptrend or a strong downtrend. That way you could play and ride the momentum of the markets. So yeah, guys, hopefully this helped, and I'll see you guys all in the next video. Bye.